Hello everyone, this is Sandra with Trading Made Simple, and this week we're going to talk about how to trade a put debit spread. Last week I created a video on how to trade a call debit spread, and I hope that made sense and I made it simple for you. So today we're going to just check out the opposite. Now remember, there's going to be a couple boring slides about the definition, blah blah blah, but we're going to get on TOS. I'm going to show you exactly step by step how to create the trade. We're going to trade it in a demo and we're going to see if we win. So stay tuned. So real quick, the put debit spread is a vertical option strategy. It's designed to profit from a one-way directional move lower. So you have a bias that the stock is going to go lower, and so this is the option strategy that you would use. It's very similar to a put option. The put debit option spread can be used to get into trades to lower your risk than a regular one-legged put option, and also can be used with expensive stocks like Amazon, Mercado Libre, Booking Holdings, etc. You can also use this for a day trade with those expensive stocks that move quickly. Okay, so in order to create the trade, you'd buy one in the money put, you'd sell one out of the money put at a lower strike price. And this put spread will cost you a debit, just like buying a put. Don't worry about how to create this thing because TOS has an easy drop-down menu for vertical spreads, and I'll show you that on TOS. The key takeaways, I think you're starting to figure out that there are a lot of different option strategies that can be used in your trading. This put vertical spread is about buying one put option and selling another put option at a lower strike price. And this put vertical spread profits when the underlying stock price falls lower. That is your goal. So if you were to Google this without any interaction, this is what you would see. The price profits, your put option profits when the stock price moves lower. You lose money if it goes higher. And we'll do the interactive graph on TOS so you could really see what your expectations are. So the first thing you need to do is hit the like button. Let's analyze the trade on TOS. We'll check out the profit and loss graph, and we'll trade this thing and see if we win. Now a cheat sheet's going to be listed in the public comment section of the video. And you know I'm not a financial advisor. This is for educational and entertainment purposes only. I hope I'm entertaining you. So let's get on to TOS and trade this thing. Hey guys, so we're on TOS, and I picked a day of January 27th. I'm on demand, and it's 6:30 in the morning. So I let it go a couple seconds so that we could get the pricing and everything. Looks like it's going up a little bit, but we're thinking it's going down, and you can see that the pricing hasn't adjusted yet. So I'm gonna just press play until the prices come back up. All right, so now let's see here. So this is 2 days on our option chain. It's 2 days expire, so this will be the cheapest options. We're on Amazon. And if we wanted to buy just a regular option, a regular put, it would be $4,155. The cheapest would be $39.13 to $41. And you probably have to negotiate that somewhere in the middle. So that's why sometimes these are, the verticals are good for the smaller accounts. So if we go to the vertical on the drop-down menu and we go to the put side, the put column, and we see the price is $3,331. We get to the closest one here. Well, that's a heck of a spread. 33.35 to 33.40, 33.25 to 33.30. That's close enough. So if I said I wanted to purchase that, you could see that the natural is actually 520 and the mid is 135. So, we might have to negotiate that or buy it at market to get in, okay? But maybe we could try to use this as a day trade and we'll see how the day goes. So we're going to go ahead and we'll try to get it. I'm going to leave this unlocked, So we try to get the best price between mid and natural. Just remember though that in the morning when there's high volatility, we may not be able to get into this trade without trying a couple times. So here we are. We might be able to get into this trade because it looks like it's going up. And sometimes you can get filled cheaper if it's going up and your play is the opposite of what's happening on the screen right now. Your pricing is much better. So let's go ahead and press. Oh, before we do that though, let's go ahead and analyze that play. Let's see. So if I go to analyze the trade, make sure we have the dates correct. So this needs to be January 27, and that's correct. So here we are. So if the price of Amazon goes up, we're going to lose money. You could look right over here. If we go up, we lose money. If it goes down, we win money, okay? And then the most that we could win is $365 if it closes and or goes far enough this way. But if it closes on this side of the graph, not on top of our strike prices, we then make money. But if it goes down on the opposite side, then you can lose money. So the most that you could lose is 135. The most that you could gain is 365. That's almost 2 to 1 if we can get it at that price, right? Like, I'm not sure we could get it at that price, but we're going to try. So I'm going to go ahead. I think we're already actually in the queue. Yes, we are. So, oh, it's actually like right there. So let's go ahead and press play. And let me get this going, just to get that on the top of our menu so we can see how we're doing. Okay, we have not been filled yet, just like real life. It looks like it's going up, so I'm not, guess I'm not too sad about it, huh? Well, actually it's going down. So let's see. I'm going to try to get in here. I'm going to reopen this. Send it again. It's just moving too quickly. So we're almost there. We're almost in the trade. It's just oh, I didn't even have to adjust it again. We're in the trade and we're going down. So that's good. So let's see if this would work out for us. Now, because this moves so quickly, like I want to get my order like ready to go and my finger on the trigger like this was like because for illustration purposes, I did not have a stop already programmed. And of course, you would want to analyze your chart and get that programmed in there so that you can maximize your gain. So let's see if, so we're just plugging along basically even. And now we're at a negative 108. But we still keep getting this little sell signal here. So, oh, look at that. We're in profit, $74. So, do I have this on, I don't even think I have this on fast forward, guys. Let me see. 32.19. No, I don't even have it on fast forward. So this is good. So this is moving pretty good. And so you could see, though, that the spread's going to be wide. I think when I close it, I'm just going to leave that open. Either that or I can put it in the middle. But I think I might just leave that open. And honestly speaking, if I were to get out right now, they're giving you the pricing if you got out, I believe, at the 130 price. This is still going down. So this is good for us. This should raise our profit here pretty quickly. Maybe not. Come on. Oh, now it's going up a little bit. Ooh, man, look at That's crazy. That was like some crazy pricing right there. So we were up 75. Yeah, that's like some really wild and crazy prices, which is interesting because it's what? It's only like moved $7. But look at this. So 65. And you know what it is this difference here. We're in the negative 50 cents to a positive 215. So, not sure I really like that all that much. So if we were to put fast forward on this and see if it goes down any lower, well, we went down $11. 20. I don't know why. Oh, there we go. But I like to see positive numbers when it's going in our direction. You would think, right? That only would just get you upset, wouldn't it? As if there's not already enough other things to get upset. So this is nice. So it's still going down. Wow. Tell you, could you imagine if you had, we're at 209. I may try to get out of that real quick. 209. See, now look, I'm getting greedy. 209. Can we get a little bit more? Oh, we just might be able to. I'm actually going to try to get out. But you know what I'm going to do is I'm going to try to get out at the higher price here. I wonder if I can. I'll just negotiate it just a little bit because I want to keep some of that profit. Oh, and we got out. Yes, $352. So that's how you would use the vertical put spread as an option for you versus just a regular put option. Great for small accounts. Your risk is a lot less than it would be if you were purchasing just a regular put, and your risk is limited. So this is a great example of how you would use this put debit spread as a day trade for a high price stock. I hope you had fun. I know I did. Whenever I make money, I have fun. And I hope I made this simple for you. If you have any questions, leave them below. Cheat sheet will be in the video comments. And I will see you in the next video.